Start the camera. All right, got it. Let's see.
I still in vacation mode, so I ain't gonna show nothing.
Oh, wow. Where
I'm
you coming back from?
San Francisco. I walked by the mirror today and I almost gave myself a quarter. So now
Oh,
I need to get a haircut.
oh man. Let me see. Okay, let me see how this let me make sure this works here. Okay. All right. All right. So yes, I spoke with Keith, and to my understanding, the group wants to know a little bit about starting their own business. So what I'm here today to do is to relay and give you some information about tax considerations when you're starting your own business. All right. Just to give you a little bit of background of myself, as Keith mentioned, my name is Charles Redmond. I'm a licensed CPA out of the state of New Jersey. I have a master's in taxation from Rutgers. I've been doing taxes for well over 15 years. I'm very passionate about it, and that's the reason why I'm doing it. All right. All right. All right. So today what we're going to cover on this agenda is, first of all, selecting the appropriate entity type for your dispatching business, incorporating your business, record keeping, financial statements, as well as tax deductions. The three legal entity types I wanted to kind of go over to you that will more or less probably be more applicable to you are sole proprietorship, limited liability company, as well as corps. I've heard there was a great interest in these three, so these are the three that we're going to focus on today. All right. So the first one is the sole proprietorship. What is a sole proprietorship? A sole proprietorship is, very simply put, it's an unincorporated business owner. Okay, that could be many of you here today in this dispatching class. You're probably doing a little bit of dispatching here and there. You're making some money, but you're not 100% sure yet. So a little bit of money that you are making, yes, that will be income that you would have to report on your 1040 return, right? But right now, it's considered your unincorporated, meaning that you're not under a legal tax umbrella, so to speak, like a limited liability company, an S Corp, or a C Corp. So right now, it's kind of very new, it's very empty. This is kind of like stage one before you decide to incorporate. You're kind of filling it out. So what is the sole proprietorship? It says not subject to taxation as a separate legal entity. So as I mentioned, the income that you will receive, as we're speaking here, like you're doing dispatching, you probably report it right now as other income, you know. But as you migrate and you say, okay, well, this is a profitable business, you know what? Then you might want to migrate to say incorporating and become a legal liability company, or LLC for short, an S Corp or a C Corp. All right. So here are some of the advantages and the disadvantages of it. So if you are a sole proprietorship, your actual tax rate would be a lot less being a sole proprietorship as opposed to, let's just say, maybe a C Corp. Now, our progressive, our tax system, you ever heard somebody say, I'm in a 10% tax bracket, I'm in a 12% tax bracket, I'm in a 22% tax bracket? Well, those brackets have income ranges. So let's just say a 10% tax bracket, let's just say is income from 0 to 10,000. And let's just say the 12% tax bracket went from $10,001 to $20,000. So it's saying here that your marginal tax bracket might be lower as a sole proprietor as opposed to, say, incorporating as a C Corp. Now, income tax under a C corporation is taxed at a minimum of 21%. So if you fell with under those 10% and 12% brackets, it's more advantageous for you to be a sole proprietorship as opposed to a C Corp, right? Third advantage, it says owner can contribute cash, withdraw profits from the business without tax consequences. Now, I want to highlight here disadvantages. The biggest disadvantage of being a sole proprietor is what? It says personal liability, risk. Because you're not under one of the respective entity types of LLC, S Corp, C Corp, if someone were to sue you per se, all your personal assets are at risk. That means your house, that means your car, that means your bank account, you name it, it's at risk. Reason why people form companies is to mitigate that risk. And that's the reason why people form an LLC, S Corp, or C Corp, okay? The second major disadvantage of being a sole proprietor is the fact that as a sole proprietor, you're unable to, on your tax return, to deduct your salary. So entities such as like an S Corp or a C Corp, they'll have income, they'll have salaries expense, and then let's just say a gain. They're able to deduct their salary from that respective entity. On a sole proprietorship, you cannot deduct your salary under sole proprietorship because there is no legal distinction between income, assets and income between a personal as well as business. So that's kind of like, in a nutshell, the advantages and disadvantages of a sole proprietorship. And that's kind of like 101. But let's take this up to a next level. A lot of people opt for our second entity type, which is legal liability company. Okay, now it says legal liability company is a business structure that protects its owners from personal responsibility of business debts or liabilities related to the company. Now, this is that legal umbrella that I'm talking about. Being incorporated gives you that legal protection that protects your assets from being, let's just say the IRS is coming after you, from being taken or garnished against because you're under a legal structure. So what it does is it bifurcates personal from business. And so this is the main reason why people will incorporate. They want to mitigate that risk, from the business assets versus the personal assets. So when people get sued, there's legal protections because you're an actual company. Now, with the legal liability company, the default classification is if there's one owner, you'll be considered a sole proprietor, but you're legally protected unless you elect to be a corporation. The second default classification, if it's two or more owners, is considered a partnership. But what people need to do is, when you form an LLC, Form 8832 needs to be filed. Why? Because it tells the IRS what entity type you are. Okay, are you a partnership? Are you a sole proprietor? Or are you a corporation? It's very important. But this is something that accountants and lawyers, this is what will be done so that not only do you know, but the audience, the world knows what type of legal entity you are, because each entity type has different rules and different regulations and different forms that are filed. So it's very important that this form is actually filled out, the 8832. Okay. Now, what are some of the advantages and disadvantages of a limited liability company? It says limited liability companies are responsible for their own debts and obligations, which is true. That's showing you right there that there's a distinction between my personal assets, my home, my car, and what have you, versus what's in the business, my trucks, my office. There's a clear distinction. The government knows that this is their personal assets versus this is their business assets. Okay. The second says personal assets are protected against losses of employees and business partners. I mentioned that. I'll go down to, it says less paperwork to file with federal and state governments. LLCs, the great thing about them is that, like I said, there is less paperwork to file with them, because when you have a limited liability company, normally speaking, you will file your regular 1040 return. Hopefully you all, pay your taxes. You file your 1040 return, but there's something called the Schedule C in your 1040 return, which shows all your profits and your losses. So it's not any additional filings that you would have to do when you have a limited liability company. And when you compare that to, let's just say, an S Corp or a C Corp, any income that's received has to be filed, and I use S Corp as an example, we'll get to that. You have to file an 1120S return. And that 1120S, all the income will be filed there, as well as the applicable state return. So it's the 1120S return, the federal, then it will be the state return. And in addition, you would also have to file your individual tax return, because what an S Corp is considered a pass-through entity where all the income, credits, and deductions are passed through to your individual tax return. Okay. So essentially, with a limited liability company, there are no separate tax filings or no additional filings. It's your 1040, excuse me, and Schedule C that will be filed. Now, a lot of people stray away from a limited liability company because one of the biggest disadvantages of limited liability company is what's called the self-employment tax rate. Now, the self-employment tax rate is 15.3% off your earnings. Yep, I said it. So if you earned $100, $15.30 is right off the bat self-employment tax. And that's considered, for those who don't know what self-employment tax is considered you pay your Social Security tax as well as your Medicare taxes. So that alone kind of strays people away from limited liability companies because of just that high tax rate. And remember, I was talking to you about those brackets, the progressive tax rate system, 10% to 12%, 22%. It's just, it could be very high when you're actually under a limited liability company. All right. So the next entity type will be an S Corp. An S Corp is considered a pass-through entity whereby all the income, deductions, losses, and credits are accounted for by the S Corporation, which are generally not taxed to the S Corporation. They pass through to the separate individual return its owners who are generally subject to taxation. Again, S Corp is a separate legal entity. It files Form 1120S. It's due March 15th of each year. And I had mentioned earlier that, with an S Corporation, all the income, all the deductions, all the credits, they pass through from the S Corp return that you will file. From that return, all the way funneled over to your individual return. A lot of people tend to go this route because, and I'm going to show you the advantages and disadvantages as to why. Because one, as I mentioned, S Corp pay no tax. Okay, they do not pay tax. They don't pay that self-employment tax, that 15.3%. Okay, S Corps, as I mentioned earlier, you're allowed to deduct the salary with the S Corporation. So you have your income, let's just say it was $100. You have a salary, let's just say it was $20. Your net income was what, $80. Okay, so that $20 that you have for salary expense, that's on your 1120S, is deductible on your S Corporation on that 1120S. So now you have income of 80, as opposed to, let's just say, when you're using a limited liability company, it would be straight 100 times, of course, that 15.3%, right? So you see the difference where the income on one hand is 80 versus 100, right? So a lot of people tend to go the S Corp route because of that factor. Some of the other disadvantages of an S Corporation would be the fact that you have additional filings. So when you have an 1120S, you have to file 1120S return, tax return, and that's a federal and state return. And some people might not want to go that route, but some people do. It's not much of a hassle. Says shareholders are taxed on S Corp on all S Corp current year profits, regardless if the corporate distributes profits or means to pay their profits. It's very true. The shareholders' marginal tax rate may be greater than the C Corp's tax rate. That is a disadvantage as well. All right. Next thing I wanted to cover is how to go about incorporating your business. All right, so here are the legal requirements, federal and state. So in order for you to incorporate your business, everybody knows you gotta have an EIN, which stands for the Employer Identification Number. That's basically your social security number for your business. Just like you and I have a social security number, your business is identified by the EIN. 2, you have to file that form 8032. As I mentioned to you earlier, that kind of shows you the classification of what the business is. It's an LLC, S Corp, C Corp, the government needs to know. And depending upon the entity classification, determines what type of tax return you will be filing, right? So if you're a sole proprietor or an LLC, you will be filing Form 1040, Schedule C. If you're an S Corp, you'll be filing federal and state return 1120S on the federal side. And like I said, I live in New Jersey. I think it's called CBT 100S would be on the state side. So those are 2 additional filings. Next, I would say, you know what, once you get your EIN, got, you classified your entity type, next thing you need to do, hey, let's get that business bank account. Why? I strongly encourage this because the business bank account, first and foremost, will bifurcate what? Personal income and expenses versus business income and expenses. That is so key. People really need to be able to bifurcate the 2. There's no commingling of assets. That's what you don't want. This is how people get audited, and this is how records get distorted, okay? Let's talk about the state considerations. I always advise, of course, you gotta, you're starting a business, you gotta put some money in it. That goes without saying, you gotta put some money in it, right? It's an investment. Probably have to file articles of incorporation. What that does is it tells the state and it tells people what your business is all about. So if you got a dispatching business, okay, put the number in. This is what we do. We do dispatching, we do trucking. The articles of incorporation lets everyone know basically your purpose for your business. Next, you got state incorporation fees. Everybody's got to get their hand in the pie, right? So when you incorporate at the federal or state level, you got to pay some fees. You got to pay fees to incorporate. And you'll see it. You see all the stuff on the website. Oh, if you want to incorporate your business, it's $500 plus state filing fees. That's the additional. They kind of get you. They don't tell you everything that needs to be done or additional costs that might be incurred. So that's that. Minimum taxes, depending upon what state you're in. I know this is a pretty big group here, and you're all across the U.S. I'm assuming. Certain states have minimum tax fees, just for the simple fact that you're an S Corp or an LLC. You just have to pay a minimum fee. Like New York might be $25. New Jersey might be $100. New York State, it just varies per state. There's just minimum fees that you have to pay every year. For example, one of my clients the other day, because of the fact that he's incorporated in the state of New Jersey, they have an annual report fee. Every year you have to pay the annual report fee. That's just a requirement. It's letting them know that you're still in business. It's just mandated that you have to do it. And next, you got the state filings and taxes. And then, you just have, when you incorporate, of course, you're going to have professional fees like accounting fees. and lawyer fees to assist you in incorporating correctly. I really strongly advise that when you set up your legal entity, you may need legal assistance, accounting assistance. Get it done right. Get it done right. Next, I want to cover record keeping. Now, many people start a business and everybody's happy, they're enthusiastic. Yeah, I got a business. Yeah, I got my business credit card. They get all happy and jovial. Whole year don't pass by. You got all these transactions going by. But you know what? Some of it's in the shoebox. Some of it's in an Excel spreadsheet. I can't stress it enough. Bookkeeping or great record keeping is essential. Your tax returns cannot be prepared unless you have great records. In order to prepare a tax return, it starts with the accounting first, then goes into taxes. So your books need to be in order, right? Last week, I had a client that came to me. He's like, "Oh, I want my tax return done. Can we get it done next week?" So, really? He just opened up a business, a bakery business, and he's got transactions for the entire year in the Excel spreadsheet. And I'm looking at this like, okay, what do you want me to do with this? Nothing's categorized, nothing's organized. How do you expect to get this in the week? It's not happening. If you start from the very beginning with great record keeping and you itemize your expenses, it's much easier to prepare a tax return come year end, as opposed to giving a person all their tax, all the information at the end of the year and trying to find out what's their quote unquote, let's say their profit and loss. So every business itself should know a few things. They should know a little bit about accounting and finances. When you're in business and you know that obviously most people are in business to what? Make a profit, right? You should always have yourself a profit and loss statement, and you should always have yourself a balance sheet. And because again, it assists with the preparation of taxation. It also lets you know where you stand. And on a few slides over, I'm going to actually show you what a profit and loss statement looks like, as well as a balance sheet. So most small businesses, what I've come across that are really up and running, they use QuickBooks. And I strongly advise QuickBooks. It's in my opinion, it's user friendly. They have now opportunities where everything's kind of in the cloud. You don't have to necessarily be in the office to do it. Everything's remote, so you can upload information into the system and your accountant can basically do taxes from here. Like most of the work that I do is remote. I don't have to physically be at a location like back in the day. That's done and over with. You load up your transactions, I can see everything, I can categorize it. QuickBooks Online is great. Because I'm with QuickBooks, I can actually, if you decide that you want to do bookkeeping, record keeping, I can actually offer you a discount to my company through QuickBooks. All right. Next, we're going to cover financial statements, as I mentioned to you. Right here in front of us, what do we have here? I have, it says balance sheet and P&L combined, right? Anyone here looking at this, can they just tell me without me saying anything, do they know what the income is for this company?
Let's see.
Just the income.
I'm looking for it here.
Or tell me how to calculate. That will work.
129.
Your expenses, your income minus your expenses gives you your profit.
She's correct.
So
if you were to
they're
take-
broke.
She's correct. So if you take that 120 over here, which says trucking fees earned, less the depreciation expense, salary expense, office supplies expense, repairs expense, will give you your income. In this case, it would be 17,131. Obviously, I did this beforehand, right? But let's take a quick look at this real quick. So from the 120 and above is considered your balance sheet. And then from the 120 and below is considered your P&L, right? This is combined. This is a combined balance sheet and P&L. So you got cash of $5,000. That's in your bank account. You got accounts receivable of $28,500. And let me just stop here at the accounts receivable. You know, in dispatching or in trucking, this $28,500 is very important. Now, what this basically says is that, you know what, someone owes me $28,500, but I don't have it right now, but I'm entitled to it, right? In the trucking industry, right, this happens a lot. They do work, the company will owe them, in this case, $28,500, but you know what? I don't want to wait. I don't want to wait 30 days to get that $28,500. So what happens is companies, what they'll do is they'll factor that $28,500. And factoring means is when you take your receivables and you sell them off because you want quick cash. So as opposed to saying you're getting that $28,500 and it's going to take you 2 months to get, I'll factor off my $28,500 to someone. Basically, I'm selling my receivables, but you know what? I'll take the $27,000 now. So I'm okay with losing or foregoing $1,500 because I need the cash now. It's very prominent in the trucking industry because, you know, they need that cash now. They might have repairs and expenses. They'll rather have it now. So I'll give off a percentage of my receivables in order to receive the monies now. This happens a lot with mortgages. I'm quite sure the mortgage that you have now, you know, was sold. A lot of these banks, Bank of America, Chase, if you remember the big bust, what they do is they take all these mortgages and they sell them off. Because you know what? The banks want the money now. So that's considered factoring, very important. Notice as you go down a little further, you got, you know, trucks and you got accumulated depreciation trucks. Accumulated depreciation is very important because what happens is you're able to write the expense off over a period of time. So you see down there below it says depreciation expense, trucks, $26,441. That's that period's expense of depreciation associated with the generating of revenue for those respective trucks in this period. So simple example, you bought a truck, let's just say it costs $12,000, and you bought it in January, you would expense on your P&L $1,000 per month until it gets down to zero. And depreciation is important because what happens is what depreciation does is it lessens your income over a period of time, right? And that's one of the biggest tax benefits that you receive. That's the reason why you know, I think trucking is really good is because you get to write off that truck over a period of time, or you can write it off 100% in that year, depending upon. So I just kind of wanted to highlight those items for you in this balance sheet and P&L. So just so you can kind of get an idea of what this is a financial statements look like, you know, at the end of the day. So as one of the members mentioned, this is your P&L, or AKA, you know, profit and loss statement. And as she mentioned, as you can see here, you know, revenues less your expenses gives you your net income. This is the formula that you would use to determine whether or not you are making money. It's important to know this timely. I mean, you might want to do it on a monthly basis, bi-monthly, quarterly, but in order for you, as you're going into this dispatching business, to see whether or not this is viable for you, you need to know whether or not you are making money. And it's very simple. You got sales, or let's just put dispatching revenue up there, less your expenses. And what are those expenses that you have? It might be, you know, monthly service fees to load boards. It might be some training that you have to do. Like, you need to know on a regular basis how much money you're making to see whether or not it's a viable business. And if it's not viable, then you might want to go and do something else. Right. Last but not least, I want to talk to you just quickly about tax deductions. Right here, I just have some very common business tax deductions. Now, I put this out here to you because I want you to know that, you know, the wealthy, they don't pay taxes. You know, I see it firsthand. You've heard the phrase. It's true. I see it day in, day out. I deal with millionaires' returns. I deal with these big company returns. And I'm sitting here saying, okay, well, they got 4 million in revenue and 4 million expenses. They've got no income. Got that big line that says management fee of $300,000. They still not pay. What they're doing is they're using tax law to their best benefit. And what they're doing is they're taking as much expenses as possible. So here are some of the common business tax deductions: accounting, bookkeeping fees. So the accountant, the bookkeeper, QuickBooks, all that stuff will be tax deductible on your return. So whether I will charge you or someone else will charge you, straight tax deductible on your business return. Advertising, your car and truck expenses, depreciation, insurance, interest, office expenses, rent or lease vehicles. If you're buying a truck, or you're renting a truck, deductible. Repairs and maintenance, your truck break down, all those expenses that are incurred to fix the truck, deductible. Supplies, taxes and license. You've got IFTA tax, permits, deductible. Travel for business, travel meals, utilities, wages, and other expenses. This is just a quick highlight of some of the expenses that are under the tax law, tax deductible. And I tell you, the rich use every little benefit that they possibly can to deduct something on their tax return. And this is what people need to do. Read the tax law. This is under Code Section 162, which is our business expenses. But it's very important. Now, you see all these tax deduction things. If you don't have good record keeping, how is this possible? That's why bookkeeping is so important, because you need these items so that you know what, you can lessen the amount of income by these applicable tax deductions. Last but not least,
Wait,
this is
hold on.
my contact information. You know, pretty much I do it all. You know, corporate business, do bookkeeping services, financial statement preparation, and tax preparation. I'm affiliated with Raw CPA firm. We're based out here in New Jersey. It's myself as well as 3 other African-American partners. We decided to form a company, and we all got a lot of experience in private as well as public accounting experience. So I'm offering for this upcoming Saturday, May 4th, between 12 and 5. You know, if you have any questions or if you need some assistance, if you want to employ my services to help you incorporate your business or bookkeeping or financial statement or tax preparation, feel free to contact me directly. You have my email address as well as my phone number. That's it. Hey, Keith.
That was awesome, Charles. A lot of
Hey,
really good
woo-hoo.
information.
Thank you.
Charles, I never heard them this quiet in my life. So
Could you go back
everybody
to
was
that
at attention.
last screen? Could you go back to the deduction screen for us?
What was that?
Oh,
Could you go back to the deduction screen right quick?
The deduction screen.
Oh, the deduction screen?
Fabio got a question, Charles.
Feel free. Go ahead, Fabio.
Yeah, actually, if
I
we
would have
go
to share.
back to the deduction screen, please.
Just a second, guys. I got to share my screen.
No worries. I did have a question.
I don't know if you want to call it business thinking, ghetto thinking, however you want to classify it as. But like, what I want to know is how often should we be going through our company for deductions? You know what I mean? So like, let's say for instance, I'm going out to dinner with myself, okay, and let's say it's like 5 o'clock. Should I just run that through my business? Or at what point, I guess, would certain things start getting flagged where they're like, hey,
Well, see, a lot of people, they want to just write off, meals. It's got to be a legitimate business. So, for example, if I'm going to, meet with a client and we're talking about business, 50% of that is a business deduction for myself.
okay,
It's got to be a legitimate business purpose.
okay,
Okay, you can't just sit here and just want to write off anything and everything. It should be legit, All right. Now there are some little gray areas here and there, but for the most part, business meals are deductible. All right.
all right, and then, okay, so I got a goal. My dream car is a Range Rover. Now here in California, I don't know how it is in other states, but that's actually considered a tax deduction. Is that so? How would that work?
I'm gonna let you ask me. I want you to give me the answer on that. It seemed like you already know.
To tell you the truth, I don't know if
I
know I'm right there with him.
Ask the question.
Okay. Well, some people.
It's,
Okay, so I'm going to tell you why. Now, normally speaking, the Range Rover. The reason why they say the Range Rover is because it has a certain weight.
6,000 pounds or plus.
Yes, something to that effect, right? See, I knew you knew.
Yeah, yeah, but still, like you don't.
But you're right. You're right. So it would have to qualify as a business. It's supposed to be predominantly driven for business. Now, people could actually write that off because it qualifies under a certain weight class, and they can deduct the cost of that Range Rover. But there's certain qualifications that it has to meet. But again, it should be for business purposes. Okay. Right. But we all know, I think we both know that, there's a little gray area there.
Because
right?
you start hearing
don't need a range, right?
you start hearing all the he said, she said, right? And like
Right.
people, and then I started to look, I was like, well, I do notice that a lot of business owners and their significant others either drive the G-Wagon, they drive the Range Rover, and I'm like, okay, and then as you're explaining, I'm like, there's a business strategy to this. But yet again, like it looked great to be in a Range Rover, but it looked better to be in it than to be behind bars for some type of tax fraud or something like that.
And something I want to express is that you also have to be able to afford it.
Facts.
You see, so if you can't afford it, then what? So these people, generally speaking, they can afford that type of vehicle, right? They can afford it, then they can actually deduct it. You can't just sit here, I got $20,000 in income, but then I've got a $60,000, $70,000 G-Wagon. Yeah. No, it's not working. All right, so that's the Kim Kardashians, that's the that's all the celebrities out there. Yeah, they can afford it,
We're waiting for 3-4 years down the line, but I mean, we got it. But I just want to make sure I'm trying to line up the path now.
How about your current vehicle? Can you write that off?
Excuse me?
How about you? Like, let's say you have a vehicle right now. Can you slowly depreciate that?
I want to express to you that, vehicles, it's limited listed property. It has to be used about 51% or more attributed to the business, Now, let's just say like a good example would be like real estate agents, right? Real estate agents, what's their bread and butter to getting their clients around? Their vehicle, right? They have a legitimate business expense associated with that vehicle because what they're doing is they're showing clients for their business potential homes, right? Now, just a normal person like yourself, me and I, you and I, let's just say we're going around and we're looking at homes on a weekend because we're considering buying. No, that's not considered a legitimate business expense, So please understand that, these items that I'm mentioning here, they have to be associated with the business, and it has to have some legitimate business purpose. Okay.
Now, Charles, I got a question. Is it possible that everybody can deduct their computer, their laptop, the desktop computer? Also, the majority of people will be working from home. So is it possible that they can deduct half of their office space in their, let's say they're working out their bedroom? Would a certain amount of feet of that be deductible? As far as like,
yeah,
as far as with their lights, their internet, cell phone, all that would be deductible, correct?
So
That's true.
there is
That's a great question.
and
That is true.
absolutely correct. So yes, just like myself, I have computers, and computer is my business. I have several computers of people that actually work for me. So that is a legitimate business expense, computers. The portion of my home, I mean, here now, yes, there is, I think it's the max about 50. I think it's 300 square feet. Don't quote me. I think it's 300 square feet is the max. I think at a rate of only like $5, something about 1,500. So if it's over 1,500, yes, that would be deducted for home office expenses. So
And
yes,
what about your
that is
lights?
possible.
Your lights, internet, cell phone?
Yeah, again, that's listed property, but again, there's some gray areas there. But yes, if it is associated with the business, it should be deductible. But again, Code Section 162 will kind of give you some, detailed breakdown of that, as well as IRS codes. All right.
I have a question.
How about your LLC? Is it advisable to use your LLC for more than one business? Like, let's say I started doing dispatching, and then I wanted to do real estate, and I wanted to branch off into something else. Do I need separate LLCs for each separate business, or can I just use one LLC as an umbrella?
I mean, honestly, it's up to you. I would recommend, if you have separate businesses, that you do have separate EINs for each one. I think it's just recommended so you can, again, excuse me, bifurcate income expenses associated with that respective business. Because the EIN, and you're doing a declaration of what business you're actually in, it's associated with that EIN when you incorporate within the state. So I think it's called NAICS codes. It's a code that you'll see on the actual tax return that tells what the business does. So it's not good, in my opinion, to commingle. Let's just say you're doing real estate and you're also doing engineering or retail sales. Like, it's for your purposes, for transparency, you want to know exactly what each respective business is doing. So I would recommend, yes, having a separate one, EIN or LLC, for each respective business that you're in.
You got three questions there. You got Cody, go ahead.
I was told if you was to have a business credit card, that if you make a purchase less than $50, that you wouldn't be required to have the receipt if you was to get audited. Is that true?
I'm a proponent of keeping records for everything. Okay. As simple as that. I think that's your biggest and safest defense in the event that you do get audited. I think that's the biggest issue that a lot of clients have, and I have clients that would, currently speaking, they don't have, or they can't substantiate their actual tax deductions. So what happens is you get audited. If you have the support, why not keep it? Now, don't get me wrong, $50, yes, it's small. I'm just trying to say that if you can keep the records, keep them. I'm not saying you got to keep every single receipt. Like, certain things you can kind of understand by looking at the bank statement what it is. Might say, license, right? But, you know, sometimes when you charge that credit card, it might just say what? PayPal, right? But that PayPal expense, let's just say it was, let's say it was $5,000. What is that $5,000 associated with? Keep the receipt, keep support, just in case you do get on. That's why I said record keeping is so important. And that's why I employ and I say QuickBooks is definitely the way to go, because, and if you're doing it on a monthly or quarterly basis, we'll know exactly what it is. But when it comes to the year end and you're combining, you're commingling all the expenses and oh, I don't know what this is, I don't know what that is, it becomes a headache. So bookkeeping, record keeping is so essential, so essential. So I advise it for everyone who's got a business, everyone. You got a business, record keeping is important. And I say QuickBooks is kind of the way to go in that respect, because they've just done excellent when it comes to, you know, their software and the intuitiveness. They got apps. It's just so easy to use.
Regina?
Okay. So say we haven't opened our business account for our business. We've applied for the LLC, all that good stuff, but we haven't gotten a business account yet. But we've made purchases with our own personal money. Like say I just purchased like a printer, you know, like stuff like that, like office stuff. How would we be able to like use that as a tax deduction if we used our own personal money for that? Like, do we just need to keep our bank statement or just keep the receipts of that?
Yeah, keep the receipts. I mean, that's considered, you know, it's a startup cost. You know,
Okay.
it's you know, it's a startup cost. It's fully, you know, it's fully tax deductible. Yeah, just keep the receipts.
Okay, and then one more question. So say I filed my LLC, I filed the name under, I just named it 4J Dispatching, but if I wanted to go back and change it, I know that you really can't change it. What if I wanted to just maybe like, because I wanted to change it to I wanted to change it to R4J Logistics. Am I able to
That's
do
a good
that?
name. Where you get that from?
I got that from Key. So I want to know if I could go back, like, how would I be able, because I know you can go back and add like a business entity, like would I be able to go back and add that name like on there, so that way even if they looked up 4J Dispatching, will they also be able to like pull it under R4J Logistics as well? Like, can I make that as one?
I mean, I will say, I mean, the naming is so important to get it right in the very beginning.
I know.
You
Now
know,
I know.
If somebody
yeah,
would have
I know,
called me,
I know, stop it.
and I'm going to leave it at that. But I will say you can do you can create a DBA. You know,
What's it called?
a DBA
Charles,
means,
I told her that yesterday.
You
well,
said
I don't know. Maybe
like dog.
he was like stick to the
DBA?
dispatching. I don't know. I don't
No,
know.
I told her to do logistics, because with logistics, it's going to be a big broad. You
broader
got a
scope.
bigger, wider avenue, because when you say dispatch, you putting yourself in that little bitty
In
box.
one box. Yes. And I don't want to be in that one box, you know?
Mhm. I mean, you can look at it two ways. I mean, one way you say, okay, you're putting yourself in that little box. Well, people know exactly what you do.
And I'm going to be great at it. I'm going to be the bomb at it. I'm telling you.
Regina, I can already tell. I can already tell by the way you're articulating these questions. But, you know, if you put dispatching, you're telling people exactly what you're doing. And there's no question in regards to what you're doing. And
Right.
I do like that. You know, it's like, you know, it's a specialty.
Right.
Just kind of like taxes. Like, yo, do you know how many types of taxes there is out here? Like, there's so many, you know.
Right.
Some people say I'm just specializing in individuals. Some people say I'm specializing in S Corps, C Corps, you know, partnerships, because there's just so many different areas that you can specialize in. But if you really become a specialist in that one respective area, people know that you are the go-to person for that.
Right.
Right? Now, on the other hand, you know, with specialization versus being general, you know, general, yes, it's good, but it's kind of like, yo, whoa, what does Regina really do? What does this business really say? Like when I look at, you know, it says logistics, what is logistics? That could be what, trucking, it could be dispatching. I'm not really sure when I look at online and it says Regina Logistics, like I'm gonna look for a dispatcher right now. So
Right.
I don't know. I'll go with the next person because that must be dispatching. So, there's pros and cons. So I'm not saying what you did is right or wrong. It's just more or less it's a personal preference. So,
Okay. So you're right. You're right. I like the way you put that.
Whatever.
So,
Next.
I'm not, I'm
Who's
not
that,
stepping
Fabio?
in. But what I will say is if you want to create a DBA, which stands for doing business as, that's the acronym DBA,
Okay.
you can do that, So there's a lot of essentially for the state, you're saying, okay, my name is Regina Dispatching, but you found that you want to be classified as Regina Logistics Trucking or something like that. That's the name you want to go by because you went online and that was available. I will say whenever you incorporate your business and you have a name, one of the first things you want to do is you want to kind of do a little search and you want to find out, is that name available?
Right. I did. And the one that because I wanted 4J Logistics, and that name was taken. So that's why I did 4J Dispatching, but I didn't realize that was kind of just, put me in a box. But I chose the 4J because I have 4 children and all names start with J. So I definitely knew I wanted to stick with the 4J. So either way, I'll probably definitely do the DBA. So Keith, thank you so much because you already had given me the answer.
Now she's trying to suck up. Nope. Who else? Fabio, go next.
Miss Victoria was next, actually.
Oh, Victoria.
Okay, I'm here. So, Mr. Charles.
Yes.
Okay, I didn't see you anymore. I thought you left.
Can you still see me?
I can see you. So the question I have is, what about let me see, I'm gonna put this. So I've been out of work since 2018. I have not that you really need to know, but anyway, I'm disabled right now, but I'm getting better, but I haven't gotten where I want to, be all the way better. They allow you to, do work or whatever, see how you feel and stuff like that. So how does that work with getting, I did LLC right now. It's just me. How does that work with having disability as long as they allow you to have it till you get better? I mean, they say you can get out and work. I'm just getting up. I don't know if the issue going to ever correct itself, but that's where I'm right now. How does it work with the tax bracket thing, with the tax?
Probably you have my information. This is maybe something we can kind of take offline.
Okay.
So you have my info. Like I said, these are my appointment times from on Saturday. We can discuss a few items.
Okay, great.
And then this goes for everybody. So if you need, like I said, if you need assistance with, I would just put out there. Some of you probably haven't even done your taxes yet. Hey, do it for you. You want to do the incorporating of your business, I could do that as well. Do the bookkeeping service and do your financial statements and do your tax prep. So I'll put that out there to you. You guys let me know what we can do and how I can actually service you. All right.
Thank you.
You're welcome.
Okay, who's next?
And I got time for one more question.
Oh, I got one question for you that nobody asks. By this as being your field, what bank would you recommend that everybody set up their business with? Because Wells Fargo, you hit bad. What bank would you suggest would be a good bank to start your business with, your business banking account with? Because Wells Fargo, you hear bad things. Chase would chase you up out the bank. You got a Bank of America. You got credit unions. What do you think is the good one to go with?
I'll be honest with you, Keith. It really is a personal preference. I primarily dealt with Bank of America, Chase, a few credit unions, but do your research because a lot of the banks have compensating balances. And what a compensating balance means is that in order for you to have a bank account, you have to have, in order to keep a bank account open, you have to have a certain amount in there. So compensating balance might be like, say, 2,500. You have to have 2,500 in that bank account per month, you know, unless, you know, and if you have less than that, you get charged fees, right? Or you have to have 3 debit card transactions. Like, there's all types of stipulations. My recommendation is you just really got to research, because I'm one, you know, I don't want my money tied up in a bank with a whole bunch of fees. So,
Exactly.
you know, so there's a lot of online banks out there too, you know, that don't necessarily have all that. So you don't have to go with all the big banks, you know. So I defer this out to you, you know, kind of like just doing your research on what will work for you, you know. But I will tell you, I mean, these fees right now for all the banks, you know, for me back in the day where, you know, as long as you had your money in the bank account, it wasn't charging anything. Now, you know, you got to have 2,500 in there. You got to write 3 checks. You got to swipe your debit card 3 times. And it's out of hand. So each bank has their own rules, regulations, stipulations for their bank accounts. And that's something that, you know, you really would just you would have to do your research on, do a compare and contrast. So what makes the most sense for you, as far as your needs, you know?
Hey, Keith, I deal with, my businesses are set up with Capital One, and they were great compared to some of the other banks for setting up my business. And we can talk about it, you know, after Charles leaves, you know, after we do our after hour chats.
So Charles, I got a question.
After our chat.
I got one question for you, Charles.
Sure, Keith, go ahead.
Are you free this Friday? Because there's a lot of people still got a lot of questions to ask, and I want everybody to get their questions answered.
You know what? I have to defer to Saturday. You got to. This is tax time.
Okay, so you say Saturday?
This is tax. I put, if you know, if people need to contact me, they have my information, and we can kind of take things from there.
Okay.
But I gotta get a little bit of work done. You know, but I'm here for you. So office time,
Hey.
if people need to, if they need to communicate with me in regards to some of the services that we provide, feel free to contact me then, and we'll do it. All right.
Right quick, sir. I'm so sorry. I'm not computer literate. Can't say that word. My name is Bobby, and I'm just trying to confirm your message here. It says Saturday, May 4th. That's not.
Oh, I'm so sorry. Oh my gosh. Listen, my apologies. You know, I meant Friday.
March 4th.
March 4th. I'm putting in 55, 60 hours a week.
Hey, we still appreciate you. Thank
My
you so much for
apologies.
clarifying that.
Thank you, Charles.
I will correct that. My apologies on that. But yes, I meant this.
You understand?
It's upcoming week.
Okay.
All right, Charles.
I've been trying to raise my hand, but I couldn't figure out how to do it.
All right, Charles. I'll talk to
All
you
right,
later,
Keith.
man. All
Keith,
right.
give me a call, all right?
Okay.
All right. See you.
Because we still got to
All
go
right,
over
thank
that
you,
other
guys.
stuff.
All right, no problem.
Okay. All right.
All right, bye-bye.
Thanks, Charles. Bye-bye.
Bye-bye.
Thank you, Denise. This is the quietest I ever heard anybody.
Yes, we needed this a long time ago, Keith. Well, I know I did.
Yeah, everybody needed that because there's some things I was looking at. I was up there like, what? I was running out the room to my wife, like, look, did you know this? So yeah.
Right. And that was a great question about the banks and stuff. When you get into business credits, but I was always told, like, I guess with like credit unions, like smaller banks, to use them because they actually like appreciate your money a lot more than like larger like banks or corporations or whatever. So that's just what I was told, but I wasn't for sure. So that's good to get that information with him saying like, just kind of do your research.
Yeah, because it's a up and down situation because you go to the smaller banks, they treat you better, but they don't have enough money to let you out. But then the bigger banks, like you said, we got to have so much in there in order to get a loan, and they want to see so much. So
Correct.
Yeah,
You know.
well, like I said, I didn't have any of that problem with Capital One, whereas my credit union required more documents than Capital One did. You know, so that and a lot of my money is over in the credit union because it's affiliated with my employer. So and so I just went with Capital One because it was much easier for me to get an account with them, you know, versus my credit union.
So Sharon, as far as Capital One, I know a lot of the business accounts, they want you to open like with a certain limit, and some of them is like $5,000 or $10,000. So what was?
Oh no, I didn't start with that. Oh no, no. The most I probably started out with maybe 2,500 in both accounts because I got two business. So okay. I put 2,500 probably in both accounts. And like I said, the only reoccurring expenses I have right now is a virtual office that I pay for out of those accounts. And I got credit card, I got debit card and credit cards with both of those accounts.
Oh, that's awesome.
And I pay for my QuickBooks.
And that was going to be my question to Charles, was about that virtual office, because you, Keith, you brought up, you know, using your home as an office. And I know when me and Sid started, you know, with this business, like we were reading all this stuff that like, if we didn't have a virtual office, that they wouldn't take us serious, or, you know, and like there would be, you know, battles we would have to go through, so on and so forth. So that's actually something I did want to see with Charles, because if they're like, you don't technically need a virtual office, then, you know.
And the only reason I have a virtual office is because I work in Louisiana, but I'm actually a resident of Texas. So my business is headquartered in Texas. So I got a virtual office there just to maintain my you know, my company there.
Right. See, with us, we did it because, you know, from all the information that we took in, it was basically get a virtual office so then you can get your EIN number and all this other stuff. Because they said that if any bank or anything tried to look up your location and it was a home, that apparently like they would frown upon it. Like apparently.
And that might be the case with a lot of spam, you know, scams going on too.
That was the case when it came to credit, but now the pros and cons outweigh itself now, because a lot of those virtual offices are coming up as illegitimate addresses. So now it's back to whether if you had to have a business address versus get a virtual office, it's just best to use your personal address. But usually it was like that before with the credit side of the game.
Right. But so remember how he was talking about, damn it, I wrote down hella notes too. Janice was making fun of me too. She's like, you writing down everything. Power of the pen. But one thing he was saying about how there was one that would basically incorporate your personal life. And if they were to take you to court, like they'll take you to the cleaners, like house and everything. Yeah. And then everything else is like LLC, so on and so forth, that your personal life and your business life are two separate. So going to what Cody was saying, let's say, because we are an LLC. Now, because we are an LLC, now I'm getting kind of hesitant. Like if I were to put my home down as an office, now is that a loophole where they're like, well, you know, we'll just sue